While the mainstream refuses to take in the new information that we have seen in 2022, at the Money GPS, we are looking into it in fine detail. Why? Because it makes it different for you, your portfolio, your retirement account, and of course, the economic fundamentals that are all in place today. So the first thing I want to look at is in and out. What's happening with imports and exports right now and how that affects the economy as a whole. The second thing is commodities, whether it is lumber or oil or gold. We will get into all of that. And the third thing is market volatility, the ups and downs. And if you stay until the end, I'm going to give you a special treat related to the Federal Reserve back in 2011. And let me tell you, it rings a bell to today. Okay, this is big stuff. Let's begin. Right out of the gate, I've got some potential good news. Supply chain signals new container prices and production finally peak. So these two articles, which I'll show you here, essentially just saying that, by the way, from 2020 all the way up until now, the prices of these containers that ship stuff overseas has been astronomical. We couldn't find enough containers. The containers were old. They had been decommissioned the year prior. There's all these different problems. Then they were just sitting on the streets of LA, like all these crazy things that we've never seen before, all at once happening. We have here this just saying China built more containers than ever before in 2021. So that supply comes online. We're talking about 7 million 20-foot equivalent units. That, of course, is a good thing. At the same time, these two companies are saying that the new container prices have fallen to $3,400. That has come down quite a bit. Now, what does this mean? Why do you have to care? It's because if you go to buy a product at the store, it's not just the materials, it's getting it into that store. It's the marketing of that product. It's the sales. It's everything that makes up the final price you have to pay. And one of those things is literally the container that it has to sit in to get shipped from wherever it's coming from to you. Now, of course, as I'll talk about in a second, there's other things that are involved. If it's manufactured locally, it still has to go on a truck of some sort. So you've got oil prices and gasoline prices that are involved in that, and so on. But in this case here, it is one aspect of a lot of these products that are moving around. If those prices are up, that means the final price is going to be higher. So if this is the case, I am hopeful that this can start to decline at least somewhat, maybe not to where we were, beginning of 2020, but let's get it better, hopefully. Here we have this article. The demand for trucks is so high that there is not enough trucks to cover the need. And imagine with food, the most important thing. This is just saying here that they're paying so much, it's getting crazy. You've got fuel prices, you can't get enough truckers, you got all these problems all at once, and that is worrisome. That is the concern. Right now, because of the cost of fuel and shortage of drivers, we are paying anywhere between $9,100 and $9,300 for the same truck that used to be $6,000 to $6,200. So basically, like $3,000 extra. It's unbelievable, and of course, that puts pressure on those final prices. Okay, so let's talk about this for a second. Let's get into, with commodities, everything, but we need to look at this first. The economy. Bank of America predicts that the Fed will raise rates by 25 basis points at each of the remaining 7 meetings this year, putting the Fed funds rate at 1.75 to 2.0. Personally, for me, I don't believe that. I just don't think it's going to get like that. But that's me. You let me know. What do you think the absolute top for the Fed funds rate will be? Also, is it going to be in 2022? Are they going to have to stop here and then start declining? Anyway, their credibility is certainly on the line. Credibility not between you and I, credibility between, the financial companies and so on. And that's not good news for stocks. They said we remain bearish on tech, stocks, and credit. Meanwhile, they're bullish on volatility, cash and defensive assets. Defensive assets. What could we be talking about here? Well, we'll talk more about that in a second. Real estate investors are buying a record share of U.S. homes. Investors bought 18.4% of the U.S. homes that were purchased in the fourth quarter. That is a record high. And this, of course, could be anybody. It could be, an investor. It could be just somebody with some extra cash and they, buy some homes. They buy a house. They buy a condo, whatever it could be. That's an investor. But it's not the BlackRocks and the Blackstones, which I talked about in I think 2 videos ago. Okay, we need to understand that. But the point is that there's a lot of money being put into real estate, which despite the fact that in so many cities, real estate is extremely overpriced, I would say it is much more solid than a lot of, different things that have really gone berserk. The prices have gone too high, too fast in many markets. You could argue some is more justified than others, but there is no doubt about it. These other markets have gone crazy, and in my opinion, have really been smacked down already. Look, we've got gold. We've got the price of gold at the time of this recording around that $1,900 range. This is towards its all-time high, which is interesting to see because they usually manipulate the price much lower. And of course, we have oil as well. Oil, closing in on that $100 a barrel. We'll see what happens. It's hard to break through that barrier of 100, but we'll see. Oil and gas stocks have been the top performers in the US and Canada to start the year, but gold miners are currently poised to steal that crown this month thanks to the geopolitical risks and the inflationary risk. So, you could see this and it just shows you that money is going somewhere. And that's why I always like to show that. If you're new to the channel, understand I'm always showing you literally the EPFR data, where the money is going to and where the money is going from. I'm not just saying, look at the price of the stock market it's going to come back. It's going to come back. Don't worry about what it is today. It's going to come back, just dollar cost average. That is not going to help you. I mean, you need to really see where the money is going to and from. This happens to be the Dow Jones. And let's be honest here. Where has it been over this last while? I mean, this is a 2-minute chart. If I go back to the daily chart, for instance, I could show you. I mean, I've done this 1,000 times before, but that red line there, just look. April 2021. So meanwhile, all these people are saying, it always goes up. Stocks always go up. So, yeah, maybe over a very long time, sure. But you have not had any growth since April of 2021. Meanwhile, inflation is eating away at that. So if you take that into account, it's actually much lower than this. People don't want to acknowledge that. But understand, some are winning. That's all I'm saying. Oil, gold, certain commodities, certain other markets, they're doing well. So did you have to dollar cost average into the NASDAQ consistently? And that's the strategy? That is not a strategy. You can keep your money in long and say, you know what? I think this is going to go long. I don't want to sell because I don't want a taxable event and so on. Sure, fine. But to just keep dollar cost averaging the exact same market all the time, I don't know. Anyway, whatever. Lumber extends a rally, something that I had talked about for a long time when I said, get rid of those 7 shares of Amazon, get onto the 7 2x4s, and you'll do well. And while I was making a joke, I was trying to point at something, and it was exact. Why? Because it was so clear what was happening. And then when it dropped down, it was going down way too fast when all of the other commodities were still going up. And this is what we're at today, over 1,300 for lumber. All right. So never take your eyes off that, and understand there's always somewhere to be looking. Don't just look at where everybody else does. Now, I had shown you the Dow Jones, but of course, if you see what has happened to the NASDAQ, tech stocks have been seriously taking a beating. As you can see, NASDAQ sinks into death cross after 16% drop from its November peak. The death cross is when the 50-day moving average falls below its 200-day moving average. Just basically trying to say that, the price is falling rather quickly. That's all. That's all it really means. And so while it doesn't necessarily mean anything, this is just one indicator. Okay, don't all the death cross happen. It's usually a worse sign than I should say a bad sign rather than a good sign. That's all. However, it is quite oversold. I mean, if I look at the QQQ right now, I mean, in many respects, it isn't exactly, doing well in the short term, but you can generally have pops. It can go higher as a result of that. I mean, just look at where it is. Not a strong place to be. I mean, it's not. You don't want to catch a falling knife, as they say. Here's that death cross again. Just saying, the first time in 2 years that we've seen this. This is the Federal Reserve. This is the Chicago Fed president, Charles Evans, just saying essentially, look, we're not going to go for the 50 basis point hike. We're going to go for the 25. That's pretty much what it is. And actually, multiple Fed officials are saying that. Oh, we don't want to go too crazy with it. We're going to go just one hike. That's the way they do it. 2 steps forward, 1 step back. I've said that many times before. Quick little update on what's happening in China with the real estate sector. Yet another developer saying that they have insufficient funds to pay their debt. How many times do I have to see this? I mean, it's the entire property sector, and it keeps going on. It keeps going on. Now, you stayed into the end, my friends. Thank you for doing that. We are well into this video, and you stayed into the end. Thank you very much. This is back in 2011. Ben Bernanke, Helicopter Ben, you know him, right? I don't have a picture of him, but I do have some money. I could do that. What's going on here? What is this all about? Look, he was grilled in front of Congress, and he said this about QE2. So remember, this is right around QE2. And Chairman Ryan says, I want to talk to you about QE2. Last time you came here, you said QE2 is not an exercise in monetizing the debt. So he specifically said this. This is in front of Congress. Monetization would involve a permanent increase in the money supply to basically pay the government's bills through money creation. What we are doing here is a temporary, I repeat, temporary measure which will be reversed so that at the end of this process, the money supply will be normalized, the amount of the Fed's balance sheet will be normalized, and there will be no permanent increase, either in money outstanding in the Fed's balance sheet or in inflation. And I'll get into that in a second. I just wanted to note something that I've been covering more recently, the word credibility being used right here. This is like right now what we are seeing today, more relevant than it was back in 2011. Think about this for a second. This was a lie to begin with. Like every aspect of this is incorrect. It's not being loaned out into the economy. The Federal Reserve is supposed to be buying it up. And it's a temporary measure, and then it eventually gets loaned into the economy. But it's not happening, as I've covered many times before, because of the operations being done. You got these, before it was repo operations, now you got the reverse repo operations, and the banks are just keeping their money at the Federal Reserve and getting this little bit of a return. That is monetization. Call it what you want. That's what they're doing. They did not They did not bring their balance sheet back to normal. That didn't happen. Inflation today, what we're seeing now, isn't the result of what has happened over the past 2 years. It's over the past 10 years. It's over the past 20 years. But people don't see that because I can't think that far behind it. Who knows? I've only been investing since 2009. No, we got to wise up. We got to smarten up, or else we're going to get smacked upside the head. And I've gotten a few of those, and that ain't pretty. That doesn't feel good. I don't know about you, but this is the real deal Holyfield. We got to know the truth. We got to understand it. And then we got to do our best to, I hate to use that word, but they always say pivot. And I think it's important more now than ever before. If you appreciate the information, hit that thumbs up button. That's what you got to do to support this channel. And also, you got to subscribe to the channel. Let's get this thing moving. I appreciate that. If you haven't seen this video yet, you definitely want to check it out. Click it, and I will see you over there.